Condo sales only second to 2016 highs. Hey, everybody. Welcome back to this week's market update, where we're going to chat a lot about, one, the state of the market, but also what is happening in condos. Um, Before we get into that, though, let's start with what's happening. Are we still seeing a ton of multiple offers? Are we still seeing houses go for $250,000 over their list price? The answer in short is yes. But maybe the activity levels are shifting between single family down to townhome, and the trickle down in affordability is now finding its way into condos. I don't know, Dan, do you want to chime in here, or should I just get it right off the hopper?
Well, we'll touch on detached still first. I think we had a couple offers ourselves this week that we can talk about, but also working with some clients out in the Mission area. And Mission right now, we're seeing the average sale price is about 20% higher than the list price. And these are, still think I know.
20%, sorry, 20?
Yeah, yeah. The homes that we were offering a couple of weeks ago for an investor, these list prices were around 850 to 900, and sale prices were ending up at 975 to $1,050,000. And these are for 20-year-old suited detached homes. So yes, and this is in Mission, Chilliwack, Sardis, these types of areas. So yes, older suited detached homes in Mission now cost $1 million.
Wow. Holy cow. We were seeing something like that in Chilliwack too, weren't we?
Yeah, well, the Sardis area, exactly.
Sardis area, yeah.
Yeah,
Sorry.
same thing. So, I mean, when we're talking about our investor clients, it was only a few years ago that we would say, yeah, you just cross a bridge. If you're in Northern Surrey, relatively easy to cash flow on a long-term tenant, those kind of rents. Now we had to push them out further as time went on to the Valley. All of a sudden you had to be in Abbotsford to get cash flow, then Mission, and now Chilliwack. And to be honest, it's almost all the way out to the Valley is now hard to be positive cash flow with 20% down at your average long-term rental rate.
Yeah. And and I think a lot of this, I mean, it's no surprise. The vast majority of it stems from affordability, and a sheer supply shortage. I mean, at the end of the day, we were involved in 2 days ago, involved in a home in Strathcona that went multiple offer, and it was still incredibly competitive. And even though they only had 16 showings and 3 offers, one of which backed out right at the last second, so it was down to us and another group, the competitiveness of those offers was still so tremendously high, right? So we're still talking hundreds of thousands of dollars over the list price that this home went for. But the competition is fierce. But one thing I do sense is, if you fast forward, or sorry, if you back up to January of this year, we were seeing 50, 60 people come through these homes, right? And then on top of that, we were seeing 15 offers. We were seeing, $326,000 over the list price. We're now starting to see, or at least, anecdotally, I've started to recognize that either the prices have gotten so high now that people are kind of backing out and waiting for things to cool down a little bit, or they've actually dropped their asset class. So they've gone from a single family home down to a duplex, then down to a townhome, and so on and so forth. And I think that trickle down effect is definitely more the case, as people still need a place to live. The demand is still there, right?
Yeah, and I think also the people that you are still competing with at that high level, it's because they likely have either lost a few times and they really want to get in, sort of a last ditch effort almost.
Mm-hmm.
But also they probably recognize that we are literally in the lowest inventory environment for detached homes that have ever existed since the data began.
Yeah.
Right. So we're in uncharted waters here a bit in that sense. And so people are, when they see something really good, they know they might not see something at that caliber and even at that price point again for some time.
And if they do, the chances of it being the price that it is this month, is it going to go up next month, right? And so, a lot of people are bidding higher right now in the hopes of potentially curbing what it could go to. That's, I think, a bit of a reality here.
Hmm.
Um, I would say though, that the heat is still under the $2 million mark. I mean, we're still seeing it at the 2.5 mark, but there's still a whole lot more interest at sort of the 1.5 to 2 million mark. That's where I think it's absolutely bonkers right now.
Hmm. Yeah. So my stat that I was talking about being the lowest inventory ever, that is 2 million and lower price point for
There you
detached.
go. There you go. So anyhow, so I think what we're starting to see here is a little bit of a trend, right? And we've seen it before. It's not a new trend. It's a trend where people go out of affordability and they move into different asset classes because of affordability and because of supply. That trickle down effect is definitely real and taking place in the marketplace right now. We're seeing, like I said, homes reaching their all-time high into uncharted territory. People are backing off; they're going into townhomes, and we're seeing fierce competition there. And if you get down to it, condos is where I think you're going to start to see the next big surge. I mean, we've started. I think the start of it's already happened, and I think it's really about to ramp up. I mean, condos dipped at the pre-pandemic level of by about 14%. Right? Everybody got out. Everybody decided to go and get into bigger space and take advantage of that. And now that that's gone back up, everybody has now come back into condos, and we've seen about 7% of that 14 recover, right? In terms of price point.
Hmm. And definitely do note we are largely talking about the downtown core
Correct. Sorry.
because a lot of the valley and those condos, Langley type of areas, they actually saw an increase
Mm-hmm.
due to COVID. But our sort of core conversation here is about the downtown area because we focus so much on it and have lived there for so many years. So yeah, Ryan's right. It took about a 14% hit. And if you remember from a past story, I think it was around September, October, the downtown kind of core as a whole, it ended up having something like 1,200 active listings at one point, which
Mm.
was about the height. And to kind of further galvanize what Ryan's saying here, that number is now down to 700.
Whew.
Right. So people saw that 14% dip, and the
Mm.
investors, some speculators, and ultimately some home buyers said, hey, that's enough of a price reduction that we're now interested in that. So there
Mm.
you go. Prices have recovered by about 50%. And the trajectory and the feeling on the ground is that that is definitely going to continue because a lot of these listings and some of our own that were quiet, let's say, for months, especially
Mm.
through up until the end of November, suddenly have a whole lot of interest, a whole lot of showings, and a lot of new listings are holding offers and getting those multiples.
Yeah, I mean, we were involved in one 2 days ago. Two stories actually. One, a batch of our own properties, which were downtown, two of which sold in multiple offers over the list price, and one that sold within 1% of the list price. Um, and all of that happening within about a week. And then the other side of it, 2 days ago, we were out in Port Moody with other clients. This is on a small 2-bed, 2-bath. Um, by small, I mean 1,000 square feet in Port Moody. Anyways, listed for 698, sold for 735K, and saw 7 offers, sold subject free. Right, so it's not just happening in the downtown core; it's happening all over the place. And that kind of leads into our next little piece here, because it's not just happening in Vancouver or in the Lower Mainland too. Many of us who try and predict where Vancouver is going will also look to other Canadian cities, albeit Toronto and the GTA, to see what's happening in that market. And reports out of Toronto are that they are seeing a similar number of activities. Sorry, so February saw sales volume up 52%, and the average price crossing the $1 million mark for the first time ever. Why is this? A lot of it is because of low inventory. The demand just seems to be skyrocketing. We've got low interest rates and higher household savings, all of which we've talked about for the last year. And I mean, even if interest rates go up, when the borders open and we start bringing in a tremendous amount of new permanent residents here, the demand is only going to sustain or increase. So I don't know how this problem goes away.
Yeah,
Short of
no,
building faster, short of building faster, right?
which can ultimately be done either, because of all the red tape we've discussed, but also, have you looked at the price of lumber lately, right? Construction prices are increasing exponentially right now as well.
Mhm.
So you've got builders who are looking at these increased prices, seeing their profit margins shrinking, seeing the amount of time it takes to actually get these permits and whatnot that they need. The holding costs are increasing. The attraction to wanting to be a builder to help with the housing shortage is somewhat shrinking. We've got a few
Mhm.
developers that we talk to, and the small, sort of small, medium, small size developers, they're getting squeezed out right now, and we need more of them, not less.
Yeah, totally. Anyhow, so um, I guess what the advice looking forward here is, I think you're going to see again a fairly big surge in condos, and I think that's just around the corner. It's definitely started, but I think as you know, buyers get frustrated in other marketplaces having to pay a lot more than maybe what they ever dreamed of paying, they're going to look at cheaper asset classes. And especially in the downtown core, I think you'll see that come back very quickly because savvy people will recognize it's currently depressed and that'll only last for a little bit of time.
Yeah, you're absolutely right. We've definitely had more investors kind of knocking on that downtown door, let's call it, than we've seen it in quite some time.
Yeah. I mean, I'll note that we've got people that live even in Squamish who moved up there for uh, honestly more space and to build. And now some of them are going, it's too expensive here to do that. And they're
hmm
actually coming back looking at buying back into the condo market back in Vancouver, right? So we're seeing people move all over the place, both for investment, especially in the condos for investment, just because of the price points, but also because of Airbnb and things like that, which will come back very shortly.
Yeah, when we talked about the interest levels and sort of the inventory for that downtown condo market, we always look to the sales to active listings ratio as well for another reference as to how that asset class in that neighborhood is acting. And it was just back in November when the sales ratio was 16%, right? So we're sitting in a buyer's market, but it only took until December, 1 month before it hit 25%, which is just entering a seller's market. And guess what? In February, it hit 37%.
Woo, woo.
Right. So, it's that the interest is clearly there. I think the people who bought, in that sort of bottom are going to see a quick rise. Not that that's what it's about, but for the people who were paying attention of it or at it, again, that 14, 15% seems to be a trigger for a lot of people to say that
Yeah.
amount, that reduction is Vancouver real estate on sale. And that's when they feel comfortable going in and purchasing it.
Well, and further to that, I mean, we typically, denote a seller's market after 3 strong months of seller's market's performance, right? 25, then 16, 25, 37. I mean, you know, it's it's going to be a very strong seller's market when it finally registers as one. But, that being said, I think it's well underway.
hmm And yeah, I think here too, like the pace, right? We've been talking about the pace. We've been talking about record breaking sales. It's going to happen again this month. If you're ready for this, March so far this year, and we're recording this on Friday, March 12th,
Mhm.
but the data up until the 11th, there's already been 2,200 homes sold in the month of March.
Holy cow. That was
Right.
like all of like February last year.
Yeah, right. Exactly. So it's basically all of March last year. Now that's sure when the shutdown started, but we're
Mhm.
averaging 245 homes sold every single
Ooh.
workday right now. And if this sustains, which it's actually increasing, but if it were to just sustain, it's going to cross 5,600 homes sold this month,
Wow.
which, no surprising, will be an all-time high for any month ever, eclipsing the previous record being March of 2016 at about just under 5,200.
So
So
it's actually a significant more. It's not a small amount more
it's
either.
8 or 9% higher right now is the
Yeah.
trend.
Wow.
So it's going to fly past it. And then you got to think what's going to happen in April, right? April was like the real shutdown of last year I'm talking
That's
about.
right. Yeah.
And then of course this year it's accentuating. So it'll likely cross 5,000 or so. But when the media gets a hold of that headline and says April sales were 400% higher than last year, because it's going to be something like that. And
It
yes, it's
is, yeah.
obviously an anomaly and take it for what it's worth, but hey, a great headline is a great headline, right? So that's what they'll likely gravitate towards. And I think that's going to accentuate again sort of the that public outcry, right? Of like, hey, policymakers, what's going on? Like, this is
Yeah.
just too much. What are you going to do? Which I guess leads us to maybe talk about the Bank of Canada a bit
Yep.
here, because
Yep.
they announced, of course, this week that they held the rates, right? Quarter point overnight right here, which was no surprise, right? They're still championing the no rate increases until 2023, but man, that's got to
I
be coming.
have a hard time buying that now.
It's
You
going
know.
to become ever increasingly hard to maintain that, right? You got to think the what just happened in the States here with the $1.9 trillion stimulus package, right? And because we're so attached to the Fed and the States and how they move up and down their rates, that amount of stimulus is going to stimulate the economy. It just is.
Yeah,
And I
of
can't
course.
imagine that Canada, or that the States rather, won't need to start to have their rates increase, because they're experiencing very similar housing numbers.
Well, and the Bank of Canada was, I believe it was every week, was buying somewhere to the tune of 4 billion in mortgage bonds every week. Um, and I believe you'll start to see that taper off. That's where it'll start first. So, I don't think you're going to see a sudden change in, like, all of a sudden you're going to wake up one day and they're going to announce a 50 point, basis point rise. I don't think you're going to see that,
Hmm.
but I think you'll see them pull their foot off the accelerator a little sooner than you thought. And I mean, governments have always kept their word in the past, so why wouldn't they now?
Good one. Well, and for those of us that are following the 5-year bond, it's actually back to like January, February 2020 numbers. So the
Yeah,
bond 5-year bond yield is pre-pandemic right now,
yeah.
um, and that's the time back when the prime rate was at like 3.95, and yet Bank of Canada still holding tight. But again, 2023 is still 2 years away, and at the rate things are going, I mean, could you imagine rates staying this low for 2 more years at this
No,
pace? I mean,
well,
it's
inflation would just go.
unfeasible.
It would just go through the roof, right? Like, and there's still some elasticity in the economy, generally speaking. So, like I said, I don't think you're going to see a sudden stop or a sudden change, but I do think you're going to see a tapering of what's been said.
Hmm.
Um, let's talk about some of these stats too through the 2020 housing boom. Pretty interesting stuff.
Right. So, when we talked about quantitative easing and the whole point of it of raising asset prices, well, it has beyond succeeded, let's just say, where the average homeowner in Canada, we're talking about the average homeowner in Canada saw about a $66,000 appreciation rate in their home. And that equates to like $1 trillion across the country. So when a lot of people say, who's buying homes and where's this down payment coming from? It looks largely, and we know largely from our mortgage specialists that we talk to, gifted down payments are incredibly common right now, right? People are leveraging all this equity they have in their homes. They are gifting their children down payments. And of course, the children are running out and getting easy credit at a very, well, almost record low rates. Um, and when we talk about like the economic divide, right? You've got the $66,000 per household, or $1 trillion net across Canada. You compare that to what the average renter increased their uh,
Net
their
worth.
their net worth by, and it averaged less than $5,000 per head, per household rather.
I mean, that speaks to so many things.
Mm-hmm.
I mean, it really speaks to, um, the fact that Canada's GDP is so heavily invested in real estate. I mean, this is how the government makes it easier for people, knowing the vast majority of people in Canada do own their homes. That being said, if you rent, man, you're just being left out of the conversation. I mean,
Mm-hmm.
the numbers don't lie, right? I mean, you're talking about $1 trillion increase in net worth versus renters who saw their net worth expand by roughly 90 billion.
Mm-hmm. So while 90 billion sounds like a big number, that
Not
5,000 compared to 66,000, I mean, we're talking, about what, 10, 11 fold amount.
Yeah,
So again, that
yeah.
economic divide is just
It's
accentuating here.
Yeah, and again, based on everything we've just said up until this point, it's not getting better.
Mm-hmm.
That's the other piece. It's not getting better, right? So, this is how the government makes people in the economy feel better, is by increasing the value of their homes, because Canadians, like we've talked about, pulling the equity out of their homes, giving it to their children. So a lot of this is domestic policy. A lot of this is domestic monetary policy, right? That we're seeing at play here. And, you know, unless you have something in an equity market, you're just going to get left behind. And I hate to say that, but it's just the numbers don't lie.
Yeah, that's the reality that we're in, and they are rewarding the wealthy. They just are, you know. And it is tough to say, but for those of you that have, I guess, recognized that, and I think maybe, well, that's a large part. People have recognized that.
Yeah.
And that's another element that is fueling this housing fire that we are in, because people are like, well, look, if the government is essentially going to continue this easing and increase my wealth by, you know, what is that? $6,000 a month compared to $400 if I'm a renter, they're going to find a way to get in, because it just feels like that train is just never going to stop. And yes, it will at some point, but right now, like I said, it's just fueling this fire.
Yeah. Yeah. I mean, it'll slow. I don't know if it'll stop. It might correct, but it's going to continue to go.
That's right. Yeah, no, I agree. It'll cycle. It will go down. We all know that. Everything goes up and comes down. But again, I think the trend, and because of the amount of taxation, again, that they're always going to make from this, we're going to see the average.
Yeah. Well, then you add to the fact that, you know, Canada's going to have a robust policy when it comes to foreigners coming into the country, right? I mean, we're looking at 400,000 permanent residences. I mean, I know they said that by the end of this year. That's just not going to happen. But by the end of next year, it's definitely possible. Those people are all going to go to the major centers. That's where they're going to find their work. That's where they're going first, right? So condos and things like that are going to see a boom over the next couple of years.
Yep. Okay, I think that's it for us this week. Looking forward, I mean, the heat's going to continue. That's just the reality. The March numbers are already showing that. Yeah. We're still on pace for record high HPI price this month. So expect all three pricing indicators to be at records this month. And I wouldn't be surprised if that happens again in April, the way things are going. So this is, it's a big ship. It takes a lot to turn it around. So right now, for the foreseeable future, this is the trend to expect. And then, hey, the talk of taxation, capital gains, etc. It's just, we hear looming heavy. Yeah, we hear more and more every week. So you know, that might be the hammer that comes down here. But as of today,
it's not coming.
Yeah, happy house hunting. All right.
Okay.
Thanks so much. Yeah, for sure. Bye.